Yeah. And let me have a quick look at your
Trades.
pairs. Yes. How much pound USD?
I'm sorry?
Are you looking at
Yes.
pound USD? Yeah.
Yes. Long.
For about long. Okay.
Yes.
All right. And Ryan?
I struggled a bit today, but I looked at pound New Zealand for a buy.
Okay. You?
I'm looking at dollar yen long.
Yeah. Okay. Yon? You on mute, Yon?
Sorry. For me today it's Aussie CAD counter trend.
Aussie CAD or buy, sell?
Sell.
Or sell? And you think
Which
it's
is counter trend.
Okay.
Yes.
Sure. And John?
Today I'm going with Euro New Zealand, sell.
Okay. Donald?
I didn't find anything I love, so I went with the Aussie CAD as a buy just because I like the setup of it. But
Okay.
I feel like I wouldn't trade it though, to be clear. But
Okay.
Yeah, today's quite difficult. There were a lot of like channels. There weren't any clear trends.
Yeah. Yeah. And it's because there's a lot of news coming in. If you mean just generally for the entry, there's a lot of news coming in this week. So there's bound to be some hold on until those news come in and it begins to move. But if you mean the bigger picture, then that's something we can look at. Nicholas?
Pound Aussie, buy.
Pound Aussie. Okay, that's good. And we'll wait for the rest to come in. Now, has anyone had any entries yesterday, today that we can quickly have a look at?
I did, yes.
Yeah.
Okay, on which ones?
I had a long on USD CAD. It was like a small loss.
Okay, let's have a look at that. And was it Ryan?
Yeah, yesterday I took a Aussie CAD buy.
Okay.
And yeah.
How did it go?
That one worked, but I was very nervous to take it on my main account, so I did it in a paper account.
Oh, that's how. Yeah,
that's how you want
fine.
it.
That's how it should be.
Yep.
Okay, let's have a quick look at USD CAD and Aussie CAD. And Aussie CAD would cover Yon's selection, would cover Donald's pair. And yeah, so let's have a look at that. And then we'll also look at USD CAD. Okay, let's start with USD CAD. And
Maybe walk you through it
USD.
fast? Or no?
Yeah. So let me give you a chance to
Sure.
read it because you have had the chance yet. So give it a go from 60. See what you see, and then we'll take it all the way to the higher time frame, just so we get our bias, and then we have a look at your entry then.
Okay.
Yeah.
So what I saw coming in yesterday was a potential refresh, right? On this is the last guy who started up here. Sorry, up in this area, right? So then we break down below to create a refresh, and essentially, if I have it correctly drawn, like this area up here would have been the trap, right? Which we then go and touch to create a primary. And when I'm looking at it, I'm thinking the price comes down a little bit. So I'm trying to annotate as best I can. But price comes down a touch. Anyway, I'm sure you can see like the little long wick that comes in for the primary.
For that one?
Yeah.
Okay.
So then I thought price was pretty much coming back up fairly aggressively. And I'm in around 6 a.m. on the 5-minute chart. But price goes in my favor about 60%. I ended up moving my stop up just because I wasn't crazy confident about the trade either. Like I might have mentioned that yesterday. Like I saw better setups before New York Open. So anyway, I ended up moving up, and then price came back down. So I think I had a chance to take profit, but my trade management skills are not necessarily up to par. I'm not really sure if I made a mistake or not. I meant to do an entire post analysis on it, but just haven't had a chance to yet. And anyway, in terms of like the longer, we can go up to the higher time frames if you want.
Sure. Now, that's good. And let's come back to these in a moment.
Sure.
Let's come back to all that piece in a moment. Let's have a look at it from, what do you see from left to right?
Sure. So left to right, we're looks like we have some giant gaps, and this channel belongs to a higher time frame, which it does.
Okay.
So you can kind of see, we're going, it's making higher highs, but the pullbacks are really deep all the way to the guy who started. So this channel doesn't look like a setup that belongs strictly to the hour time frame.
Excellent. So why is that? Because you have some sort of a price coming down. Okay, we don't know if it's coming in deep or not. Fair enough. Goes up. This time it comes in very deep. We say, okay, that's interesting. Hi, James. That's interesting. Then we say, okay, well, okay, you've come in deep, but when you go up and break the high, just launch. Don't stay around. It doesn't launch. It begins to again hold around that high, and showing us we have some sort of a potential channel happening at the moment, like you said. Now, why do we see or say that this channel doesn't belong to the 60 minutes? Because of massive gaps in between. So we say it's a channel but belongs to a higher time frame. Now, because it belongs to a high time frame, we cannot solve it on this time frame. We would have to go to the high time frame to solve it. Now, what we say is, a channel, which is a sign of a slowdown, someone above is slowing it down. This is meant to be, or there's got to be some sort of a level that's slowing it down. All we've got to see, is it on the higher time frame? Is it a downtrend channel, or is it an uptrend channel to give us our bias? Now, why are we doing that? It's because ultimately the most important piece is that trend. We need that trend to have our bias. Everything that you see over here comes after our trend. Trend is more important. Okay, so let's draw a box. And let's go to our 4 hours. All good, Nicholas? You're
I'm fine. Yeah,
happy to go. Yeah.
Yeah.
All right, 4 hours.
Yeah. So on the 4 hours here, you can see that this same move here, or at least the recent where the box is drawn, right? It belongs to a move down. So let me just annotate real quick, like right, like this move down, it kind of like belongs to that. But previously that, if we look from left to right, it looks like we had a move up because we can see the prices above the moving averages, right? So you can tell on the daily, like we had a move up, but price comes down after that. In regards to like the pink boxes I draw, and this move looks like it belongs to that. So potentially, if we were to go up to another higher time frame, as we can tell, this doesn't really belong to the 4 hour either. This could be like a refresh of a higher time frame.
Okay, very good, very good. Which in other words, it could be, as we see it, there's prices going up above the MAs and it's slowed down, begins to come down. Could this be a pullback, or like you said, a refresh to then go higher? Is that what we're dealing with? It's still a piece with big gaps, so that's the information we're getting. But we can go with that bias or with that idea to the higher time frame to understand, okay, is that right, or do we get more data to understand what this piece is? But whatever the case is, there's some sort of a move coming up, and then that move, you could see if price is over here and the MA is that low or that far from that price, then at one point we say there was a strong move that happened that will open up. When we go to the high time frame, we can see it, but there seems to be a strong move that has come in at one point. That's why the price had moved away so much from that big MA. Yeah. Okay. So that being said, we simply say, all right, we seem to have some sort of an up move, and then is that a refresh or a pullback for that up move? Is that what we have? Is the bias for the up on the higher time frame as well? Let's confirm that on the higher time frame. Yeah, shall we move ahead?
Yeah, sure.
Okay.
Yeah, so this is the time frame where, obviously I did this before we took yesterday's class, but this would be the one where I would slow down. So like, if you're looking at the daily here, we clearly have a refresh. I mean, obviously the move is up all the way from left to right, right? Like we have a slow kind of like channeling move up, and then it takes off. But as it takes off, we get a deep pullback, and this deep pullback, you can essentially count as another refresh in this area where the box is drawn. Right. And whatever you want to call it, you want to call it a V formation, like landmine right here or whatever. Right.
Yeah.
Like, I don't care what you guys call it in terms of urban Forex, but like we're approaching that area. Right. So like that'd be a cause for concern, even though the 1 hour looks like, if you go all the way back to the 1 hour, it looks like we were bullish, and it looks like, okay, we're eating up that pullback after the primary. So price might go, this would be a warning sign to say, hey, if you have profits, which I did, right, to take off some like right away. So
Okay.
like I'm looking to get like a 1.5 to 1 risk to reward ratio, but realistically I needed to take off some profits like pretty much as soon as the trade was in profit, which it was. But yeah, so this is what I wasn't privy to going in, and this would be the area where I know we can go further than this and get the whole entire bias, but I'm just pointing this out, like, this area right here, sorry, I'm bad at drawing this stuff, would be like the area for cause for concern, just because we're approaching, if this is a refresh, right, we're probably gonna get some sort of move down in whatever trap area that we're at, and then back up, right? So
Okay.
like this trade might be ready later. So anyway, I just wanted to point that out.
That's good. That's good. So keeping that in mind, whatever you've just said, whatever we discussed now and whatever we discuss tomorrow's a session where we go a bit more in detail on advanced pieces. Then I want you to focus more on, okay, if prices come to an area, even though, let's say the story is whatever the story is, and you're only trying to do, let's say it comes down, then it comes right back in, and you're only trying to do a very quick reaction sell from an area or that piece over here, then when we talk about today and tomorrow is, okay, is that an area where this can happen? Or is that an area where this can easily just go through it and you may not get that reaction? So even though you're simply doing a very quick sell, right? Just put yourself on the right side where even a quick sell would be an easy achievement for you, right? So I'll talk about that a bit more, but I know what you're trying to do, so that's good. However, before we come back to this, let's talk about what we have over here at the moment. So on the daily, we have this piece, but prior to it, there is a very big hold, right? And then that hold eventually breaks out. Now, keep one thing in mind: whenever you have a big hold on a higher time frame and it eventually breaks out, we say whoever was involved in here before it breaks out, and when it breaks out very, very strong, very hard, not everyone has had the chance to buy when it goes up that strong. So there's a higher chance that it can come back into that hold, into that range, before it begins to go up again. Now, either that happens, or as it's breaking this area, it could also break a level on the way where it may use that to then launch instead of coming back to that range. So when we go to the higher time frame, we want to see, is there a level that it broke as it was going up, to understand, okay, it could use that before it goes up. So that being said, let's draw a box on that trap. You could see it came back and touched that upper side of the range before it began to react. Okay, so keeping that in mind, let's go to the higher time frame to understand what this range is, what is here on the left. But as of now, we say chances of it coming back to this range before it reacts is high. Okay, now, which is done already, but let's understand the story overall. Okay, let's go to the weekly. Okay, would you like to do a very quick read from left to right just to understand the bigger story, Nicholas?
Right. Yeah. So from left to right, this is kind of more like chaos, like we saw, like I think it was Swiss. I forgot Swiss. I forgot what was that yesterday. But yeah. So price moves up, and moves down from the left. Comes back up and struggles to get above that previous high, and then crashes back down again. Then we have like what seems to be that range that you pointed out, right, where price is struggling up in a channel, and then explodes out from there and gets back up to the previous highs, where basically we stop and come back down to that point that so basically this area up here, like this is a point where it was like, okay, that's as far as we're going, right? Because there's tons of volume there previously, back in 2020 of May, right? So price is a natural reaction from that area and pushes back to that range that we had.
Okay, that's good. And I'll talk about this a bit more today. So from, again, left to right, we have some sort of a move coming up. Deep moves down, goes up, deep moves down. We're saying, what do we have? Still plenty of gaps. So we're saying this comes from a much higher time frame. Looks like there's some sort of a channel happening at the moment, and we are part of that channel right now. So let's open this up to understand, is this an up moving channel or a down moving channel to understand the bias before we come back to, okay, what do we do with this? So let's go to the monthly. Okay, monthly, what do we have?
Yeah, so the monthly also larger gaps here. But price is previously above the moving averages. Made a sharp move all the way down here, right? Comes back up, moves down. And then basically, like, similar, this belongs to a higher time frame again, just given these giant gaps here, right? And then, looks like we're kind of like, almost, I want to say channeling back up to the previous highs up here, right? So, a higher time frame like the, the monthly, should indicate what kind of move this is.
Yeah,
moving back to its previous highs.
Yeah, perfect. So that's awesome. So what we say is, okay, we have some sort of an up move, and then price breaks that up move, giving us a refresh of that up move. So let's go with that idea before we confirm on the higher time frame, giving us a refresh. That refresh, if we have a look at this move down, we say, okay, look, this move down has got its discount or has got its refresh, begins to hit it back down.
And it's not going down anymore.
And it's not going down anymore. And then it begins to come up and then hold above at the moment. So it begins to look like there is some sort of an up moving bias. Let's quickly confirm it so we can then say, okay, all done on the biasness. So I'll just open this up to understand what this up moving piece is. And what we have is we have some sort of a move coming up. And for that move coming up, we begin to have a refresh. Now, refresh, we are assuming that it will begin to continue back up. That's the whole idea of an up moving refresh, right? The only thing right now
did we lose him?
Yeah, I think so.
It appears so, yeah.
Yeah, you just have to wait. I think he's taking his break again.
Hey Thomas, how long you been in UF?
I think this is let me see, this is I think my second. Yeah, this is my second time, but I'm a full-time trader, man. I trade full-time. I'm a mechanical engineer retired, but I used to be an expat for 25 years for a semiconductor company. I live near San Francisco. I live in Napa.
Awesome.
I live in Napa.
Okay. Cool. I'm in I'm a former New Yorker. I moved to Los Angeles out here.
Yeah, 2016, man. I worked I think 4 years in New York City also. But I got tired of traveling. I mean, it was just difficult on the family and myself and all that stuff. But at the same time, I was learning how to trade, so that became pretty good. I mean, I've done stocks, options, commodities, and now Forex. I think 5 or 6 years or something like that.
Okay, cool. You found success after you Urban Forex?
Yeah, it's a little different with the stocks and all that, but yeah, I mean, I had few classes. Other than this, I think Ali is teaching you how to trade supply and demand. But I use supply demand for my model as far as trading is concerned. Because I've been trading for quite a long time, and the signals, I love the signals as far as that I get in order to enhance my model and all that. So, but what's he's teaching you is good stuff anyway. It's good, but I'm a lazy guy. I've got an easier way to trade.
Understood. I like it. Whoever takes it to succeed,
Yeah.
He's back.
Apologies.
Was that a bathroom break, Mr. Ali?
No, that was me seeing my phone dying, low battery, and I know I'm on the data using the phone, but still I'm like, should be okay, and it dies. Okay. Okay. So yeah. So this is that area where we say, okay, we have some sort of an up move. Our refresh is coming in. For that up move, that could be the primary coming into the traps above to release. And then the whole idea is, okay, how does it release? Does it struggle to then continue to go higher? Or does it push down a bit before it goes higher? We are in that piece at the moment. So just knowing where we are, that's good. However, we are at the moment part of this range. So we've got to be very careful to say, okay, well, we are part of that range. And we shouldn't forget this because this is a much higher time frame. It's a big time frame. We don't want to be getting caught in say, okay, I want to buy, it's a buy bias, but when does this range begin to break out? We don't know. It's still a range. So the bias is buy, but keep in mind that we are part of that range at the moment. Okay, so that being said, we say, all right, we know what we're dealing with, right? We know what we're dealing with. So if we know what we're dealing with, then let's understand how do we tackle this. So if I give you a moment to think about this and say you have an up moving bias, however, right now you are part of that range in an up moving bias. What do you think? What could be your game plan when you're trading on a smaller time frame? How would you tackle this? Any ideas?
Yeah, measure the range, right? See where you're 50% and what have you, as far as inside the range. Your bias should be the going from the bottom to top. That's your range as far as the range is concerned. But meanwhile, the range is such a high thing because it's a 6-month chart.
Yeah.
You can,
yeah.
If in my case, I measure the space between the range and go from there.
Okay. Okay. All right. So if let's say, for example, you have an opportunity to buy this within the range, let's say if we mark this range and you know the whole thing is more of an up move, and let's say you on your smaller time frame, this as an example, I'll be covering this properly in the coming days. Now, just as an example, if you get an opportunity on this to buy this, which is, let's say, and I'll show you which time frame, but just bear with me on that. But let's say, let's have a quick look. And try and see an example to help you all out. Okay. and it's something I'll be talking about a lot more in detail. However, let's say, for example, and don't worry about the time frame right now. I'll be giving you exactly which time frame to go to, but you have a buy bias, and let's say, for example, you come to your charts right now and you have some sort of a last buyer, and that last buyer begins to break through and begins to come back for your release, which is your primary, and begins to react from that release, but react in a very bad way. Now, if it does that, is that a good thing for you or a bad thing for you? What do you think?
If we're looking at
It's
it
a-
as a buy, good thing.
It's
Right?
a
You
good
wanna
thing.
buy it.
Yeah.
It's a good
Yeah,
thing,
good
right?
thing.
Yeah.
Because
Yeah.
because you're saying, okay, very good. Now, whatever buy I do, it's telling me it's getting ready on the smaller time frame, and it's also with my bigger bias. So you say, okay, that's excellent, because whatever buys I do, even if I don't plan to take it a lot higher, even if I only take a buy from here to here, but it will be a smooth buy because the bigger boys are buyers as well. Whenever you're going against the bigger boys, you'll have spikes, because if the bigger boy is buy and you're trying to do a counter trend, then you have lots of spikes. But if you're buying with the big boy, then it's generally smoother, right? So that's the whole idea. We say, okay, well, even if you're doing a very tiny buy, or even if you're trying to say go a bit higher, when you're going with the bigger boy, your setup will give you an indication that, okay, you've had your release, but it's not going down. It's holding. That means the buyers are eating up all those positions that are coming in. So begin to do your secondary to go higher, right? So that's the whole idea when it comes to, okay, you're in a bigger piece, you're in a bigger range at the moment, then whatever opportunities you get on the smaller time frames to buy this, then those buys would be smoother. Whatever opportunities you do when you're selling it, just keep in mind that you'll have some spikes, because the overall is a buy bias. Now, what it means is that you're looking to buy within that range, and of course, the lower you buy, and if you come up to that top where you stop your buying, you tell yourself that, okay, well, if I stop my buying, and so I don't force that break of the range, because I don't know if it's going to break now or if it's going to break in the next 6 months or 8 months. I've got no idea. But it doesn't mean that you cannot do buys as it's going up, because now you've identified it's a big up bias, but you are within that range right now. So you've got to respect that range. Once that range begins to break up, then you say, okay, well, it seems like the bigger refresh is kicking in right now. Does that make sense?
Yes.
Yeah. Now, for example, right now you say, okay, if prices began to hold at the bottom of that range and it broke out, we say very good, because this is months and months of a range building up. When it begins to break up, that's a good sign, because that's telling us, okay, that push from the bottom is now starting, and there's a good chance it can begin to go high up to that top of the range. So as a buyer, we say if prices begin to break up, the chance of it coming back into that range before it goes higher is the probability is a lot higher. So whenever it begins to break up, okay, you're able to do the buys as it's going up, because this is high time frame, it's the monthly. You're able to do buys as it's going up. But whenever you see your buys are failing, they're not going high anymore, keep in mind that, okay, seems like that move down coming into that range before it goes back up again is now beginning to come. Let's talk about this a bit more in detail. And Nicholas, I'm going to go slightly away from what you're doing, but just so you understand how to tackle it before we come back to your piece. Okay, now, as it's going up, and you see 1 month, 2 months of prices going higher, how do you tackle this? Let's say, for example, you say, okay, that's very good. And let's say, for example, you see you come to your 60 minutes, and on your 60 minutes, you see prices are going up, and it's very strong, very sharp. You say, very good, that's excellent. Now, if prices are going up, are you able to buy that high at this stage if it's just going up strong?
No.
However, if you then get a refresh of that move up on your 60 minutes, and your refresh says to you, very good, that's an opportunity for you to begin to buy this and enter the push going up, because it's buy bias. The whole thing is a buy bias, right? So you say, okay, well, let me see how the primary comes into the trap area. And if it begins to do this, I'll leave it aside. I won't even touch it. Why? Because what if it's just going up and it's probing back down? Correct? However, if it doesn't do that, and if it begins to go up and then not perform, that seller is not performing as a release, you say, looks like that launch is still healthy. Let me do my secondary buy and take it, even if it's up to that high and nothing higher. That's still good. That's still a good distance. Yeah, but you're getting an opportunity to buy within the bigger piece. Okay, then it begins to, and then you're out. Let's say you've completely come out of your trade, or you've closed 80% of your positions and you've left the remaining running. Whatever the case is, that's all money management. However, let's assume you're closed, your full trades. It begins to go higher. You have another opportunity. That's the same high over here. You have another opportunity where you have your last buyer gets taken out, and you've got your primary coming in. And you say, okay, because I know there is a good chance it can come back into that range again before it launches, I need to be careful. And if the release begins to give me a bad release, then I have to be quick in buying this, taking it up to just here. But keeping in mind that it can begin to reject or collapse down anytime, because that move down is still pending. So knowing what you're dealing with, knowing what this piece is, you're in a buy bias. When a range begins to break up strong, then it's got a higher chance. You can begin to have a bias to say, okay, I'm going to buy it, but I'm going to allow my setups to tell me, should I buy or should I not? Right? The way the release begins to show up. Does that make sense, everyone? Right?
Yes.
Yes.
Yeah. Okay. And I'll talk more about this, a lot more about this tomorrow and day after, but I'm just giving you just a flavor of how should you be looking at, although you're on a higher time frame, to get the bias. And you see, if you were to come here on the higher time frame, you say, what the hell is this? It's such a higher time frame. I don't want to deal with this, right? That's very, it can put you off very easily.
It does.
But right? But if you look at the details and say, okay, I'm not looking at trading the higher time frame. I'm in fact looking at trading the smaller time frame. But if I can understand what this piece is, an uptrend. Okay, a refresh is coming in. That's good. A refresh needs to come in to go higher. But at the moment, I'm in that range. So we say, yes, buy bias overall in that range. Any buys I do from the bottom, taking it up to the top, that's where I've got to stop. So I don't want to force the market. Then I have this picture in mind. But let me allow my smaller time frames to tell me that if it's going up, then because that release is not doing this, it's holding. That means it wants to go up. So the smaller time frame is giving you a further confirmation in terms of timing that it wants to go up now and not in 1 month's time, if that makes sense. Yeah. Yes, Nicholas.
Yeah, quick question in regards to this exactly. So if your secondary ever goes below your primary, I'm assuming you're just like letting it go,
That's a violation.
right?
Yeah, that's
Okay.
that's something I'll be talking about tomorrow. That, okay, let's say, for example, you're trying to buy this move up and on the 60 minutes, and you have your refresh, you have your primary, and your release comes in so strong and it does this. You say, I can't buy this. The sellers are very strong. It simply means that you cannot deal with this anymore and you've got to do some other steps. I'll talk about that tomorrow. What do you do?
Thank you. All right, cool.
Yeah.
And then I guess one more quick thing, like this range that you drew here, right? And price shooting out of that range. I'm assuming, and I meant to ask this actually yesterday. Anytime we're drawing, like, we have areas where there's gaps and there's ranges and we break out and price moves fast. The way to anticipate that, I'm assuming, is to get the story on a higher time frame. Is that accurate?
Yeah.
Right. So
So-
to anticipate any range break, you're going to a higher time frame and put the story together and say, hey, this range might break up or down, right?
Yes. So your anticipation, what could happen next, always comes from the higher time frame for sure. So even in this case where you have a range, which is part of a bigger range, and it's at the bottom of that range, so you say, okay, as part of that range, it's got a higher chance to break up and go to the top. That's one thing. Then you open up the bigger piece, you say the whole thing is an uptrend refresh to go higher. You see? So it gives you that higher probability.
I have a question. If you back to the 6 month, the higher.
Yeah.
Let's make this distinction. If you say this is refresh, okay, and break this high. This would be the first P, and this is this. Yeah.
No. As of what I've shown you so far, you know how we said that when you have a move up and it begins to break down and creating traps above, you have a trap above, then for your P to get confirmed that it's your P, prices needs to come back into your trap first.
That's it.
Yeah.
Again,
Okay, so why is it important? Because it's like I said earlier, it's very easy to say, let's say we go back to that daily or weekly. It's very easy to say, okay, I don't want to look to the higher time frame. I'm only trading the smaller time frame. It's very easy to say that. However, just by doing what we just did on the higher time frame, and this is something we will not touch upon for the next maybe years, because it doesn't, the whole uptrend where it's at may not change. This is the 6 months, and you still have gaps. You see, such a high time frame, such a high. The setup belongs to a much higher time frame. So we say this should not change as a bias. All we've got to do is, keeping that in mind, we say whatever now we do on the smaller time frame, on the smaller time frames, would be that bias. When we buy, we say we're with the flow. When we sell, we are against the flow. Now, for example, let's look at this. For example, let's say, and I'll talk about this a lot tomorrow. Let's say you begin to stop buying because you see your sellers are coming in hot at the top. How is it coming hot? Because you are also looking to buy at the top. You have a trapped buyer at the top. Your primary comes in. Your release begins to come in hot. You say, sellers are very hot now. Stop your buying. Yeah. Now, let's say this move begins to come in. And let's say you have that move coming down, and it's here right now, and it gives you your refresh on a smaller time frame to sell this again. So you say, very, very good. I know it's got a higher chance to come into this range. I'll keep an eye on this piece as well, just in case. But I'm here right now. I can easily do a sell back to the same low, which it doesn't go anywhere. It's still that low. Or maybe I have a bit more room. I can take it a bit more before I close. You see? So even though your whole thing is a buy, you can still do a sell, but do a sell when things are beginning to become a seller, even if it's for a short term. Because if you have a buy bias, for a buy to happen, you may have a pullback, you may have some sort of sellers coming in for the big push to come up. So you won't always have a buy. But at least you know that when you're selling, you've got to come out quickly, because the buyers can jump in anytime. Does that make sense?
Yes.
Okay. Now let's come back to your piece, Nicholas. And let's say right now we're dealing with this at the moment. So we say, okay, buys, all that stuff we're done. And let's say we were buying, and then we stopped buying. And right now, prices were coming down. We would have got involved in that sell, because we said, okay, there's a higher chance price could come into that range or even over here. So let's do quick sells before we say, okay, now stop selling, because what if it begins to react and go higher? So that going higher, as long as you know, and this is simply to be more aware, as long as you know that you've already touched that range and it's reacting and it's going higher, and you're selling in a move where that can happen, it just tells you that whatever counter trend you do, you really have to be quick in and out as much as you can, because the counter trend in such a move is riskier, right? Does that make sense, Nicholas?
Yes, it does.
Yeah. So it just gives you that awareness, and it tells you that, okay, if I was to be a buyer, it would be much more comfortable. But if I was to be a seller, because I see a setup, or let's say, for example, you do your correlation, and correlation tells you that the whole of USD group is weak and the whole of CAD group is strong. So it's telling you to sell this, and I'll talk about this on Friday. So you say, okay, well, my correlation is telling me to sell this. However, I know it's more of a buy bias. Any sell setups I get to sell, I've got to be quick in and out because the bigger picture is a buy, and it's already beginning to go up from that area. Let me show you one example to give you an idea. Let's say we go to USD Swiss. Okay, USD Swiss. Very similar. Would you agree? Very similar, where you have a hold and prices begin to break up. So let's just because the USD Swiss story is a lot different, but just in terms of the range pop up. So goes up and then eventually begins to come into that range again. Right? Now, this has the potential to do what it's done, which is it goes up, react first, and then go higher. Or it also has the potential to do that and then go right up. So to assume that, okay, a sell would have to come in, it's a 50-50. So it may or may not come in. That's one thing. Let me show you another example. Okay, so what do we have over here? We have, again, a big hold and then a strong breakup, right? A strong breakup. Now, that strong breakup has a chance to come back into that range. That's the first option. Or it can, while it's breaking that range, it can break a level where it can use it before it goes up, correct?
Yes.
Right? So in this case, what it does is it comes down, comes short of that range because there's a level over here that it uses to go higher. And you see, then it begins to go up. In this case, it just holds and then it goes up very fast. And again, this hold may come in, or it could easily just do that as well. So the whole idea is that as long as you know the possibilities, as long as you know on which end you are, then if you're doing a sell and if your sell begins to not perform, it begins to say struggle, just say, oh, maybe now the buyers are coming in, I'll just exit, because you're going against the bigger picture. So that's where it helps you to say, all right, I'm going counter trend. I'm doing a very quick 1.5 hour or 2 hours. I'm not looking to do a big, massive move, but I have to be careful in case my sells struggle. Yeah. Make sense, Nicholas?
It does, yes.
So, any other questions you have on your entry we can have a look at?
Sure, if you want to. I went down to the 5-minute chart to get an entry yesterday at it's like almost at the end of our call. So like
Okay.
near 6, but yeah, we can go into it later. I don't want to like dominate the class with my example. I know everyone's learning from it, but
Sure. No, let's. I want to talk about one thing over here. So right now, and you see, this is all chart reading. I haven't even mentioned how do you trade this, but I want you to everyone to begin to see what you see. So when we say, okay, now look at the entry, it will make more sense because you're now focused more on how to read the chart. If you have a hold, and a break, what does that mean? And what could happen next? All that is very important. Entry is secondary. Entry is the least important. So let's talk about this. So we're on the daily and we're trying to sell this piece, correct? Because we say, okay, there could be a reaction from that strong move down. Let's have a look at selling this. Now, let's open up. If I remove all this, let's open up just that piece. Now, let me open this up on the 4 hours first, and then just so you see what this piece is. Have a look at what this is, and then we'll see this on the 4 hours. I'll give you a few seconds, and then I'll move to 4 hours. Okay, so at the moment, what you have is you have a move going up, and you have your highest point, and your highest point comes in with your last buyer, and your last buyer begins to now break properly, correct? Over here. Okay, now we say, all right, that's good. Let's draw our trap area like that. Okay, now what happens after that? You simply have your primary coming up to go higher. Now, as per the setup, this is a sell opportunity. And we say, okay, sell opportunity at a move coming down. All right, could there be a very quick sell? Sure. It goes up, right? Spikes or slams right back down. This is that area where we say it should just release and go. Doesn't go, begins to come right back up, hold at that trap, and then it begins to go. Why is that happening? Think about it, if the whole thing was a seller's market, then when the primary comes back to your trap area, because there's more selling pressure, it will touch the trap and it will begin to go lower, slam down. The fact that there is a lot of buying pressure, you see it goes up, sellers attempt, buyers don't let go. Right? Goes right back up because buyers still want it, begins to hold at that trap area, and then it begins to come down. So the whole idea is that if you know why it's happening, just because there is more buying pressure and you're getting involved, that helps you. With your counter trend sells, that helps you. Then you say, okay, well, I know what this piece is. I need to put in my stops a bit wider. Whatever entries I do, I need to do it a bit wider. What if it spikes within that trap and then it goes? I have to be a bit more careful. Does that make sense?
Mhm.
Just because
Yeah.
there's more buying pressure and you're going against the flow for that reason.
Well, that's why I bought.
Oh, you bought over here?
Yeah, I bought. I sorry, I should have interjected. Like when you said that the sellers struggled, right where they struggled, I bought right there. I was like, okay, that's not going down. That trap's not really providing much. So then I bought,
Okay.
and then yeah, I didn't sell here. Like the sell look did not look good. So
Okay.
I bought right at that spot where you like we went down, the trap pushed it down, but the sellers should go all the way down, and they did not. And
Yep.
that's why I bought right there on the 5-minute chart.
Okay, that's good. That's good. So if you bought, now one thing I want to which again I haven't mentioned yet. However, it's good that you enter this on the 5 minutes just so I can mention this piece. So let's go back to what this whole thing is. Right now, I want to mention one thing. If the whole thing comes from a much higher time frame, a huge time frame, do you think our 5 minutes entry time frame will be able to move this big piece?
No.
No.
No, right? So the fact that I've asked you all to do your 60 as your time frame and 5 as your entry, so you can begin to test it and begin to get involved in the market. And then the fact that you've also entered this on the 5 minutes and you've experienced it. Tomorrow, the whole session tomorrow would be if your setup belongs to a much higher time frame, then how would your entry be, and on which time frame should your entry be?
No, that makes tons of sense now. Yeah, got it. Like if you're, yeah, so you have to get that. You have to get the exact setup on the time frame that you're looking for, and then
Yes.
whenever you get that, it's 2 time frames down from there. So like
Yes.
if your setup is on the, if we find the actual trade, which seems still to be hard to do, by the way, but if you find the actual setup, like, oh, here's the primary, secondary, go 2 time frames down. So I did see that yesterday. So technically, in theory, like this is not the primary, secondary. I don't think is in play, like right there. So that 5-minute entry wouldn't have any influence at that time.
It wouldn't. And there's also one thing that we haven't done yet, which we'll do tomorrow. So, which
It
is
makes a lot of sense. Yeah. Makes sense.
which is this. And let's do this. Let's quickly go for a 5 minutes break. We come back and I'll explain one thing on the charts.
Oh, you're leaving me on the edge of my seat right now. All right.
You know how you have those Netflix seasons where you say, "Oh,
Yeah.
now next season, you've got to wait next season." No, I'm joking. Just 5 minutes. Okay, let's begin. So, like I said earlier, the whole idea is for us to look for that trend. So when we come to the 60 minutes, we say, oh, look, I have a trend. Very nice. Just give me that refresh. I'll begin to sell this. However, if you come to your 60 minutes and you have a big mess, you say, looks like I'm in a higher time frame range or channel, then what you're doing is you're going to the higher time frame to look for where that trend is. So let's take an example. Let's say you were on Aussie Swiss, and Aussie Swiss on the smaller time frames, you saw all a mess. You saw prices going sideways, channel, and then piece by piece, you came from the 60 minutes all the way to the higher time frame, and you stopped at the monthly, and then you say, ah, nice, I have a downtrend, right? I have a downtrend, and then at the end of that downtrend, I get a refresh. Why? Because I have my last seller that gets taken out, and then I've got my primary and I've got my secondary in that trap. I'll talk about what this piece is, what that piece is a lot more tomorrow. But then you say, okay, very good. Now I know I've got to sell this. And even if I sell it just to the bottom, I can just play around with the trap itself. And I don't need to even break below. This is a much higher time frame, and I can make use of these months and months of moves going down. Now, when you have this, you simply have it easy because you have a downtrend and you have a refresh to sell this, and you say, well, all I've got to do is I'll go to the right time frame. I'll talk about it tomorrow. The right time frame from this time frame that owns the setup to do my entry. I'll talk a lot more in detail about it tomorrow. This is our scenario number one, where things are nice and easy, nice and simple. Yeah, everyone, you're good so far on this?
Yes.
Yes.
Yeah.
Yep.
Okay. Now, what happens if, yes, you had moved from your 60 all the way to the higher time frame to look for that trend and to look for that refresh so you can begin to get involved on the smaller time frames. However, you come to an example, for instance, you come to a setup where even on your higher time frame, even let's say on the monthly, you have a big range. You don't have a trend over here. There's no trend, right?
Mm-hmm.
You have a big range. Then what do? Do you completely not look at Aussie yen at all for the longest time? That's not possible.
You look at the setups inside the range.
Yes. You look at the setups inside the range to say, okay, well, how do I deal with this? What do I do? Right? What do I do? And I'll talk about this properly tomorrow. Yeah. So we say, okay, well, with whatever we have, then what do I do? How do I buy this? How do I sell this? What's my game plan? Now, to do all this, whatever you're learning right now, which is knowing how to read the charts, that's a lot more important than, oh, I simply want an entry. Your entry, the whole idea is that if you enter a trade today and you make money, and one doesn't know how and why they made money, then you're not able to redo it tomorrow, repeat it tomorrow. And that's more important than making money, if that makes sense.
Makes total sense.
So that's something I will tackle tomorrow. In fact, we'll use this Aussie yen example, and I'll say, okay, well, what do you do in this case? What do you do in this case? So then, whatever mess you see on the chart, you say, I still have a way to trade this. And this is still looking at it from a macro point of view. Imagine you just take that understanding, that story, and you say, I'm only trading the 15 minutes, the 5 minutes. Then you can do so much. But with the right, say, frame of mind that, okay, the bigger picture is this. I'm only doing a very quick sell from here to here on the 5 minutes. It shouldn't change the market. It shouldn't change the bigger picture. But it will keep you at a comfortable zone. Instead of not knowing what is above you, what do you need to do, that becomes very tricky. So we'll cover all this properly tomorrow. Yeah? Okay. So that being said, let's have a quick look at okay. So let's have a look at Aussie CAD. Yeah, the majority of you, many of you were looking at Aussie CAD. Let's have a look at Aussie CAD. Aussie CAD, 60 minutes. Okay, so let me just double check. We've got Donald, we've got Jan, and who else was looking at Aussie CAD yesterday? Was it?
Yeah, that was me, Ryan.
Ryan, right? Ryan. Yeah. Okay. So Ryan, Jan, and Donald. Okay, so let's do this. So yeah, if you want to take turn after turn and let me know what you see on the 60 minutes.
All right, I'll go. So we starting from the left, looks like we had a bit of a hold, broke out. Yeah, a bit of a pullback going higher. Possibly another bit of a hold here. And then we start to slowly break a bit higher. So at the point where, so yesterday when I was looking at this was, I had this as the high, price had come down and I was looking at this as a primary and I was trying to buy this secondary here. But based on just what I didn't know or wasn't looking at any of the higher time frame stuff, but I was just looking at this as an uptrend. Had a bit of a discount and it looked like a setup I could buy the secondary on.
Okay, we can have a look at that for sure. Okay, how do you like this whole up move at the moment? Do you like it? Do you dislike it? Do you think it's healthy? Think it's not healthy? What do you think?
I think it still looks healthy just because we have some holds with some volume and we don't really see too much volume yet coming up on the top.
Okay.
But it does look quite like it's been going for a while.
Okay, very good.
It's trending, but it's in a tight channel, right? It's trending upward, but it's in a tight channel. And it's been going for a while.
Okay, so Theo and not Theo, Donald and Jon to talk about it, and then I'll jump in. I'll just bring my phone closer because I think the hotspot needs to be a bit close to the computer. 1 second. Okay, who is going to go next?
I can.
Sure.
Let's see. Let me take a look here. So yeah. So we see the whole move up, the hold down here, that breakout. Looks like we have another hold up here, and then the breakout again. And as it broke out, though, it had another little hold right here. So lots of little holds throughout. Once it gets up here, we see the move back. Now when this one comes up right here, this guy down here ends up making a higher high, just slightly, but he does make a higher high. So when it comes back in, we see the fight happen right here, and then it powers through. So I was looking at that as the trap area right here.
Okay.
Yeah, so that was the trap area. So I looked at this right here as the primary, and then when I see the seller's reaction, I see let me erase that. I see okay, well, let me erase that. That's weird. Okay, there we go. I see it comes down here, and then there's just one wick, and then it comes down again another wick. So that was kind of my clue on the lower time frame. It's time to get down there. So like right now, it ended up on the 5 minute. It started to range and then just popped out of the top of the range. So that would have been either the buy off the bottom of the range, or as it broke out. And as it broke out, it had a spike of volume. This just now happened, but yeah, that was kind of the setup that I was looking at. What I didn't like about it, though, is that it is so overextended. And it also looks to me like the 240 also had a rollover. And we hadn't discussed what we would do in that situation. I assume that we would then look at it as a 240.15, but I just wasn't sure. So I didn't want to get too deep into it. And then I did also forget to mention there was that level right here. Let me get back to my drawing tool. There was this level right here that we came back to that I was using as kind of my anchor point.
Okay. And
where was this trade? Sorry, my fault.
Sorry, what's that?
Where was the initial, like, was there a trade, or you're just looking at it?
I didn't trade it because I didn't like how it looks like the 240 had rolled over, but the trade just barely happened. So right here, this was the primary when it pushed up into the trap area. This is the bottom of the trap. So then the seller's reaction, the divider right here, you can see there's one wick, and then on that second wick, that's when I got really interested. And then as it comes up through here on the 5 minute, it developed a little range. It rolled over on the 5 minute, developed a range on top of them, and then just broke out of the range with a spike of volume as well.
Okay, got it. You're counting that area as like as the trap. Sorry.
Yeah, this area right here is the trap between these two lines.
Yeah, okay.
So this guy right here.
Got it.
Yeah,
thank you.
Barely made a higher high.
Ollie, I want to actually ask about that too. Like those, would you also count that as a range? Like I'm trying to get myopic on stuff like that, but it doesn't matter how we draw the traps. Like that is enough for a type 3 trap.
Sure.
It is. It is.
That's something. So I'm going to talk about this in a minute. Let's just talk about the bigger picture first. Yeah.
Right.
The bigger picture first. So, Jon, what else? What else is that? All you see? Donald, is there anything else you want to add on the bigger picture from left to right?
Yeah.
No, just the concern that the 240 was going to get involved, and so I wasn't sure what to do. So, to be clear, I just got spiked. I would have gotten spiked out just now. So.
Okay, and I'll talk about this. Talk about this in a minute. Okay, and okay.
Yeah, for today, I see here the last guy who started it is here.
Yeah,
it was taken. Okay, and here I consider it to be a trap.
Okay,
because we can see here buyers.
Yeah,
and then after that we have considering the refresh, we have the primary.
Okay.
Here.
Yeah.
We have the secondary.
Okay.
Here or here, and after this break, we have this trap here.
Mm-hmm.
Now I expect it it to be broken, but not so hard. And
Mhm.
after it test to take a buy.
Okay. Okay. And
Yeah.
how in terms of the bigger move up, how do you like it, dislike it at this stage?
It's overextended. This move, it's a uptrend. It seems like overextended. I
Mhm.
know where the SNR is here from a higher time frame,
Mhm.
and yeah, I wanted to go to with the trend that here.
Okay.
But after entering here, entering on 5 minutes after a break on 5 minutes.
Mhm.
Yeah.
Okay, that's
Keep
good.
on going.
That's good. Okay, so let's.
Yesterday I had Aussie New Zealand, which you said is very slow, which was right.
Yeah, it was slow. Okay, okay. So it's good that you experienced it. Okay, very good. All right. So that being said, let's have a look at the bigger picture on this.
Can I add something, Ali?
Yeah.
These gaps here doesn't tell us something that this chart is a part of a big trade or big another time frame.
Yeah, exactly. That's something I was trying to, get you to all think about before we even look at that last trap. So I want you all to really pay attention to what's happening on the bigger picture before we have a look at, okay, there's a trap or not. Yeah. So let's do this. Let's put a box like this, and let's go to the 4 hours. One thing I want to mention is that when you have prices going and then giving you a pullback and then going higher, you see it begins to respect these areas, this SNR, and then it goes. So, and then whenever it goes, now it's going higher, it's respecting SNRs. That's showing that whatever this move up is, at least at the moment, it looks healthy, it looks good. You don't have very deep moves coming in before it's going up again. So these are details I want you all to pay attention to before you even look to trade this. So let's do this. Let's go to the 4 hours to understand what the bigger story is on this. Okay, now what do we have over here? Who wants to go first?
Uptrend.
Okay.
It seems like the uptrend is continuing from a higher time frame. We can see here the MAs, which are flat and a little bit down. I'm not sure if it is a downtrend or uptrend, but here it's a consolidation.
Okay.
Okay, down, then up. Yeah, here we cannot see an SNR from a higher time frame.
Okay.
And also the volume tells nothing. So
sure.
Maybe we should continue to go higher on a higher time frame, which is daily.
Sure. Okay, that's good. And what else, Ryan and Donald? What else do you see on this, on the 4 hours? From left to right?
Yeah, so similar with the MA, since it's crossing over, it looks like it's rolling over on a high time frame. So either it might have been coming down and coming back up, or it's a continuation going back up. But there's something going on the left that we're not clear of yet. So it's hard to tell if this move is, I guess, a pullback or a continuation or what.
Okay. Okay, I think that's a good point.
How
We
far
still
left
see
do
some
we
gaps
normally
in
go?
between, but nothing crazy. So
What's that, Donald?
I was just saying that we still see some gaps in between, but nothing too crazy. It looks like 240 might still be a little bit too small to really see what's happening.
Yeah. Nicholas, you're saying how far back do you
Yeah, so how,
move the
how
chart?
far left do we lose? Yeah, do we move the chart? Or how far back do we go normally?
Yeah. Have you noticed that I haven't done any of that in whenever we look at the charts? What we do is we just simply reset our chart. There's a reset button over here at the bottom, and we say we look at left to right, whatever our screen gives us, and then if we want to understand what's on the left, we simply go to the higher time frame. We don't move our charts left to right.
Okay.
Yeah.
Yeah. Okay.
Okay, let's do this. One thing to keep in mind is that you have some sort of a move coming down and then goes up to come down, doesn't come down, begins to hold, breaks up, and then it begins to go up strong. This seems to be, if we go to the higher time frame, it seems to be, it's trying to break above something, and that's the break above. That's how it's breaking. It's breaking hard. Does that make sense?
Yes.
Yeah. So let's do this and go to the higher time frame. Okay, what do you see now?
Refresh.
See? No.
Channel going down.
Okay, a move going down.
Yeah, so it's coming down channeling, get a bit of a refresh here, go again, makes a new low, but then comes in deep again, another new low, and now, yeah, it's completely just taken out these levels, but hasn't, I guess it's approaching this area now, but it does look like, yeah, it's crossed the MA, the 200 MA quite strong, so it's looks like it's reversed that trend.
Okay. So what we have right now is we say, yes, we are seeing an up move on that smaller time frame, but it's coming from a downtrend story, at least for now. Right? So you know how you were saying, is it overextended? So and so and so. Well, that's one thing, but could it also be reaching some sort of an area before it begins to react? Is that also happening right now?
Yes.
Right. So yeah. So it's these things that you say, okay, well, even though it's an uptrend on the smaller time frame, but will this be a counter trend if we sell this? And if it's a counter trend, then are we already in an area, or we still have more room? Let's say, for example, if it's somewhere here, they say, do we still have more room? Okay, maybe another buy here and there, and so on. So you know how far you can still take it. Yeah. But whatever the case is, we have a down move with still many gaps, and we say, what is that piece coming up? What are we dealing with right now? Let's open this up a bit more on the higher time frame. Let's do this. What else do you want to add to it? Anyone?
Seeing kind of the same thing, looks like the downward channel and then a pretty strong move up, but we still don't know for sure what's going on the higher time frame.
Yeah.
So in general, when we see channels, we can't really form a bias until, because this channel down could be a pullback of a move up, correct?
Possibly. Yeah.
If we have a channel. All right. So like we can't really form a bias until we just go all the way up and see.
Yeah.
Right?
Yeah.
Okay.
Especially because they tell you to go up because of these gaps. They're telling you that you cannot form a bias on this time frame. There's still a lot of gaps. You have to go higher. Okay, let's go to the weekly. Now what do we have?
We
It
have
looks
a
like
downtrend.
It looks like a refresh off the track. Right?
Yep. You have a refresh for sure.
To me, it kind of looks like the start of a channel going up. Like as this guy's coming down slowly, all of a sudden we have this explosion that comes up, and then we have this high to this low. So we have a higher low now, and then we have a very strong reaction. It almost looks like this might be developing.
Okay. However, based on what you have right now, so you have a down move and you have this piece coming in. What is that piece for you at the moment?
Yeah, that would be the refresh. It just looks a lot more powerful, and maybe that's just me getting excited, but it just looks a lot more powerful on the way up on both examples. Even down here, the buyer right here looks a lot stronger than anything that's happening on the downside.
Yeah, and that's good to keep in mind, because when we go to the higher time frame, you will see this and you'll say, oh, okay, whatever I was seeing on this time frame made sense. So I'll keep that thought. Keep that thought. Okay. Okay, what we have over here is we have some sort of a move going up and it comes down. This is the lowest point. But then a refresh begins to come in. Yeah, refresh begins to come in. So you have, let's say you have your primary that brings the price back down. We'll open this up on the monthly to see where the last seller is. There's still big gaps. The monthly will have a cleaner last seller, so we can open that up. But there's a primary secondary happening at the moment on this. All we've got to understand is this a good trend? Are we in a trend, or are we in a bigger range sideways where this move down is part of that range? Because generally when that happens, then your buyers are still very strong, like we see over here. Okay, so let's go to the monthly so we understand, we see where our refresh is. Okay. Isn't that interesting? So you have a big sideways movement, whatever this is, we'll have a look, but this is your highest point, this is your lower point, and this move is within that bigger piece. Right? So if that is within that bigger piece, what do we say? That the buyers and sellers are both very active, correct? They will both fight. So although you have your last move down and then a refresh is coming in, but it's not that proper trend that we like, where then you have your refresh. Because when you have that move down and a refresh, it's simply telling you that this trend is controlling that refresh and no one else. Whereas in this case, you have the buyers also controlling that piece. So every time a discount comes in for the buyer, they take it hard. Even though they may not want to keep on going, that's a different story. But when they take it hard. Yeah. So this is a big mess we have on the higher time frame, where the whole thing is a sideways. The whole thing is a sideways, and this piece is coming in as part of that range. So in this case, what do we say? We say for buyers to come in strong, it's understandable. It doesn't mean that this trend that you see right now on the smaller time frame will keep on continuing to go higher. It can, but it doesn't mean that's the case. So the trend or the strong move you are seeing on the smaller time frames is actually that piece coming in within that move down refresh within a big range. That's how messy this trend that you are seeing on a smaller time frame is in a bigger picture. Does that begin to make sense? That your 60 or 4 hours may show you a trend, but what exactly is it? And is it going to stop anytime soon? Is it going to begin to react from wherever it reaches right now? So if I then would ask you a question, that this is where it is at the moment. This is where it is at the moment. Then, based on what you have, you see, doing a buy that high, will that worry you?
Yes, very much.
It's risky.
Yeah. So let's have a look at that buy setup. So first of all, what we have is so just to come back to your setup first, Ryan, where you said if I, and please let me know if this is what you meant. If this is your yeah. So if this is your last buyer that goes up and then slams down and then slams down, then you say, okay, well, this is my trap area. You draw your trap area from here to the top. And what do you say? You say, okay, because prices haven't come into your trap area or release at the moment, you cannot gauge how strong the sellers are, so you can begin to buy it again. What happens over here is this is still part of that move going down. So it comes down, it breaks, does that, tries to go lower, cannot, and then it just goes right through the trap. Doesn't even stop at the trap. So it doesn't show you how strong the sellers are from that trap. But in this case, it just goes and then slams right back down. That's one thing. So there's no entry over here to answer your question. No entry over here.
Okay.
Yeah. And then same thing happens over here, where if this is your last buyer, comes down, goes up, comes down, that's simply a walk in the park. There's no hold as such. Yeah, there's no hold as such. And what happens after? We say, okay, we have a trap because prices go all the way down. Let's draw our trap. So if that's our trap area, do we have any release? Does price come back into the trap to show you, can it go, is it weak or strong before you can buy it? Yeah. So you don't have any entry on this either. This is simply buying that primary to say, okay, let's buy and take it higher. Now, that's something that doesn't always happen. So to gain consistency with such a setup, then you're simply saying, okay, I may get it right. But for you to repeat this again tomorrow or day after, it won't be possible. Or it's not that repeatable, if that makes sense. To have an edge is that you need to bring the price back and say, every time it comes back here, I want to see how the sellers perform, and I want to enter that to buy this. And then I will create my data set based on this setup, and not if it does that. If it does that, let it do it, let it go. But you now know, and I want you all to pay attention to this, that you know what sort of a move this is right now. It's not even an uptrend, like proper uptrend. Could this be some sort of a, so if we go back to that monthly, could this simply be some sort of a reaction where it does that, comes right back in, and then begins to do a channel? It's possible, because there's a fight between the buyers and sellers. So what the bigger picture is, and then going to your smaller time frame to trade those, it's a lot more important than just seeing, oh, there's an uptrend and we don't know where that uptrend really is coming from. Now, if you simply look at that 60 minutes, then that 60 minutes shows to you, oh, you have a nice move up, get a refresh and begin to buy this. But the higher you go, it's telling you, watch out, watch out. Yeah, does that make sense?
Yes.
Or is anyone confused?
I just had one question. So where I had drawn the trap, I looked at that like it wasn't really like a struggle or anything like that, but this area right here where the,
Sorry.
You're good. Gotta zoom back in. So this area right here, let me get that again. So this area right here. So would you want to see like a push back and then go, kind of an idea? Like what is it that you're really wanting to see?
Right. So right now, what this piece is, it's a trap. It's trapping these buyers above, correct? And this is that move coming down. This is that break coming down, creating that trap above. But prices can easily do that and keep on going lower. Prices can easily do this and come react from that piece and then still go lower. All that is still part of the break. The break doesn't stop until prices come back to the trap area and you say that break has completed and this is the primary going back to the trap area. Right? And then we say, okay, well, then if that's the primary coming to the trap area, now we want to see how the sellers react from that trap area. If it's bad, then we begin to buy this. If the whole story is nice with the buy. What happens is if one begins to buy from these areas, this whole piece may belong to such a higher time frame that this break can still go on and on and on, and any buys you do will fail. So having an edge where you begin to buy earlier prior to it coming to the release, there's a lot more work needs to be done before you begin to buy these primaries. To really say that this is the bottom, it's not going to go down anymore. Does that make sense, Don?
Yeah, absolutely. And I guess what I thought was I was buying the secondary. And so like the walk in the park part of it, is it that you want to see like another push up kind of an idea in this area?
Yeah,
Yeah.
Ollie, I'm sorry.
Yeah,
Like
just
it would need to stay in that area for
Yeah.
longer than it did.
yeah. So maybe something like this, like that, where you say, okay, well, it's not just coming down, going up, coming down. It's nothing like this. It's more of a hold, at least some sort of a hold, because of course
Okay.
the longer the hold, the better. That's definitely the case. However, if there is at least, okay, comes down, begins to go up, just don't go down now, begins to hold, okay, all right, okay, there's some sort of a hold right now. But if it just comes down,
Okay.
does that, and then goes away, that's at least that's not a hold. That is better than this one, but the longer the hold, the better, if that makes sense.
Yeah, for sure. Okay, cool. Just want to make sure I understood that part.
Yeah.
Okay.
Yes, Nicholas?
Oh, no, nothing. That was exactly what I was asking earlier. And to Donald, was that trap area? Because like you get it wrong. It's your whole analysis is off.
Oh, yes. Oh, yes.
Right. That's all. Yeah.
Yeah, so I'm actually a bit confused on why that trap area is so high up, because I thought the last buyer who started it is from here, isn't it?
Okay.
Or is it this guy here? Because that trap is so high up. I thought this whole trap would be a little bit lower at that where this guy is.
So,
Or am I wrong?
It's type
No.
1. It has to break support and resistance.
so what you have over here is you've got this move coming down and then goes up, doesn't go high. So, okay, comes down and begins to go up from here and begins to close above. So we say, okay, we have a buyer in this area, correct?
Yep.
Okay. So if say the buyer is sitting somewhere here, then which is that SNR before? So which is that SNR that it pushes down and cannot go lower and then goes right back up? It's that one, right? That's the SNR.
Okay. Yeah. Sorry, my bad. Yep.
Yeah.
Okay.
Because
Yeah,
it's
got it.
lopsided. Yeah, lopsided. We say it's the SNR is over here. We draw a trap from here.
Okay.
Okay. Now, I really want to ask this question, which is, even in this scenario, even if prices did come here and it did that, and then you begin to buy this, will that give you confidence to say, oh, let's begin to buy? And if you look at the bigger picture, the bigger picture says what it says, what we saw, will that not worry you?
Yes, it would.
Right. So the more important piece is the bigger picture. How much distance do you have to take it higher? Is it even a proper, so keeping that intact, keeping that properly say organized, then you can do whatever you like as it's doing whatever it's doing. Yeah. Okay. If that is good, let's take a quick 5-7 minutes break. We'll come back and we'll look at other pairs. So if I was to ask you a very quick question, from whatever we're looking at right now, what's the very most important piece to first say, okay, we have that?
The
Trend.
story.
Story.
Yeah, which is finding that trend. The story is to find that trend. Yeah. Tomorrow, what we'll do is, tomorrow's a bit more. I'll pull you all back to the whiteboard and talk about some concepts where we add, and we talk about things like, for instance, if you have your last seller, and for what you've done so far is I've been asking you to get that last seller taken out first before you have your refresh to sell this. Tomorrow we say, okay, well, if you have that trend with you and the trend is still very strong, then what if an opportunity comes in within that seller's territory to sell this again? How can you sell this without that last seller getting taken out? Yeah, so we'll talk about that tomorrow. How could you still sell these ones, and how to do it, what to look for, and so on. So we'll cover that. So whatever you've been doing this week, or so far, you're looking for that last seller to get taken out. You may not get many opportunities because you don't always see that last seller taken out, so you can get involved. So so by looking at that piece, it will bring you up more opportunities for you. Yeah. Okay. Any quick questions we can tackle before we wrap up?
I have one.
Okay.
So it's more in regards to it's it's a macro level question again, but it's like, are we looking at the smaller picture first, then go look at the big picture? Right. It feels like, particularly as we're, looking across pairs and looking across setups, and maybe this is a spot that you'll get to again. I'm ahead of you one more time. But like, it seems like we're going on a micro level journey to then go look out to get the bigger picture. Right. Because, yeah, it's like, or vice versa. Like, it should be like, okay, we know the story here, right? We should be looking like now detailed into other time frames to go find a setup that works for us. Does that make sense? Like, so if we know the story on like GBP USD, for example, it's like, okay, this is positive, per, bouncing off the bottom on Tom's example yesterday, right? Now, are we going to look like drill down into other time frames to say, okay, here's a primary, secondary on 15-minute, 3-minute, and then trade that, right? Does that? I'm not trying to say like we're looking like what from a macro level perspective, like what yeah. Hopefully that makes sense.
Yeah.
Do you get me? Like,
yeah, for sure.
I know we're doing the big story here, and we're trying to get like understand like, okay, like here's your setup, and now look at all like what could happen, issues, so on and so forth, and macro level, big picture in terms of like where this price could be going from here. But should we be doing it the other way around? Does that make sense?
Yeah. So first thing first, if say you are coming from that 60 minutes time frame, and you say, look, on the 60 minutes, I have some sort of a channel. That's why I'm having to go to the higher time frames. Now, if you come to the higher time frames, and let's say you come up to your monthly, and on the monthly you see a nice trend down, and you say, okay, very good, and I have a refresh to sell this, then that's very easy, because then over here we say, all right, from this time frame, go so and so time frame down to trade this, and it becomes easy. However, let's say you are on the 60 and you come and then you have a mess on the smaller time frames, and you come to the higher time frame and it's still a mess, then you would again need to go back to a smaller time frame to say, okay, now how do I tackle this on a smaller time frame? Do you get that piece, Nicholas? Yeah. So you would again have to go back to the small time frame to say, okay, now I have this big piece. What do I do with it? What do I do next? However, when you're coming from the 60 all the way up, you're creating an understanding of how the smaller time frames look within that bigger picture. So when you come to the bigger picture, it's easy for you to go right back to the smaller time frame and generally at the right time frame to say, okay, this is what I need to do. You won't have to go back and look for, oh, what do I do now on a smaller time frame? If that makes sense. That's the first thing. Second thing is, as you're reading the charts and you're coming from the 60 minutes all the way up, you are building an understanding of how things look. So let's say, for example, if you come to your much higher time frame, which is the monthly, and you simply see that move up. If you see that move up, you will not learn anything from it. But when you're coming from your 60 minutes and you say, oh, look, I see so and so details within that move up. And by the time you come to that move up, you've seen a lot as details, as the detailed bit. You're unknowingly learning a lot about the charts, how price moves, right? So even when you go to a smaller time frame, like the 15 or 5 minutes, then those moves will make sense to you because you know how to read the charts. But if you straight away come to the higher time frame to say, oh, what is that big piece? Then there are details that if ever is opened up to you, you'll get lost. You're like, I don't know what to do with this. It's hard to explain, but generally, when you're coming from the smaller time frame and looking at the details and then going to the higher time frame to know that those details, this is how they sit within the bigger picture, it helps you to get to know the universe above and universe below while you are still on whatever time frame you are on. It helps you to know, okay, without even going to the higher time frame, this is how it may look. Does that make sense, Nicholas?
Yeah, it makes sense.
Yeah. However, the whole idea is that you do not trade anything. You don't not look at the 28 pairs and do your selection. You do your selection based on correlation, which I haven't even touched yet. You do your correlation, and correlation tells you, let's say, buy pound USD. And you go to pound USD to look at pound USD in more detail. You don't have to look at all 28 pairs and say, okay, what do I do next? So I'll talk when it comes to putting it together as a so you can understand
I think I got
what
it.
you're doing.
Yeah.
I'll put that together on Friday. So I think the way you're thinking is good. It may bother you now because you're thinking ahead, but it's good because when I talk about it, it will make sense quicker.
Yeah, sorry. I do that quite often, but it just,
it's
usually,
yeah.
It helps me understand things when you cover it, it's just like, oh, I get what he's talking about. Like without you having to say, you know what I mean? Without having to follow along what you're saying, right? Because I'm constantly thinking like, kind of one step ahead. I'm a poker player, so like I do that crap all the time. Yeah. Right. So like
I'm quite similar to you in that sense. I do feel that I'm less relaxed that way as a personality, because I'm always thinking, oh, what could this be? What's that piece? What's this piece? How do I put it together? But in a way, I think it's good because when time comes and I talk about it, you're like, okay, that it makes good sense. So it's good and bad, if that makes sense. But it's more good than bad. More good than bad.
Yeah, I think I know what you're talking about. I think I'm also seeing that stuff, even with the inflation numbers that just came out. Like there were some setups that probably could have been, like, I see what you're saying. Like, you know, you mentioned it to someone else, like someone asked you about the news and all that in terms of, you know, you guys trade setups and the news kind of goes along with it. So I'm seeing it as well. But yeah, I'm looking forward to the session, and I think I get what you're saying, even with this example right here. So I appreciate the information.
No worries. Any other questions before we wrap up?
Yeah, just one. So I think in yesterday's video, you were talking about the news and saying you want how to look at inflation and the interest rates.
Yeah.
Together.
Yeah.
I'm not sure if you covered that yesterday, but
no, I haven't yet. So in short, what generally happens is that whenever you have, so a currency is measured by how strong the economy is, right? And an economy is measured, economy's performance is measured on how much foreign investments are coming into the country. That's how economists would measure, okay, is this economy healthy? Is it not? So for example, if say the UK economy is doing so well, and the UK economy would say to the outside world that if you put in $1 million, I'll give you 3% interest return on your money compared to what you're getting in your country, and so on. So you see lots of money, inflow of foreign investments, foreign money coming into into that country, into that economy. What that means is that the currency of that goes up, of that economy goes up. The demand of that economy, of that currency goes up. Now, that's generally the case. So it means when interest rate goes up in an economy, that means there's more value, more demand for that currency. Why? Because if the UK, let's say the UK has 3% interest rate right now, and tomorrow they announce that they're going to increase it to 4%, that means whoever have money in that country will not get 3% for their money, they get 4% return for them in return. So that's generally how interest rate helps foreign investors to get more returns. However, what's happening these days, and that's one thing. Now, the reason why interest rates are increased normally is to fight inflation. When generally inflation is 2%, and it was always maintained at 2% in every healthy economy. However, if the inflation goes up to 3%, the Federal Reserve or Bank of England would increase the interest rate to bring down that inflation, because high inflation is bad for many reasons. Like even for people, if inflation goes up, then it's going to cost them more to buy stuff. It would be higher prices at the shops or petrol or whatever, and that's bad for people. And of course, high inflation also has an impact on the overall economy as well. Now, so they maintain that inflation to bring it lower, and to bring it lower, the only one of the main tools is to increase interest rates. What's happening these days is, because of what's happened in the past, which is printing of money, QEs, and the whole financial crisis in the past, inflation has skyrocketed. It's gone very high. And for that, any interest rate they are increasing the last few months is not enough to bring down that inflation. It's not controlling the inflation, right? So you see, when there is news that, okay, interest rate is going up, you see pound goes up for a while, and then straight away it begins to crash. Why? Because the market says, okay, you've increased interest rates, but it's not enough to control that inflation. So we don't believe in this economy, prices crash. Right? So these days, it's very important to, when you're looking at interest rates and you're saying, oh, let's say tomorrow interest rate is going to go up, don't just take it on its own as interest rate. Always say, okay, how does that compare with the CPI, with the inflation? Is that, would the market look at it as, okay, that's good enough, or what's going to happen? So always, when you're reading about interest rates, always read hand in hand with CPIs and inflation, so at least you get the bigger picture. So right now, you see, in the past, when inflation news comes out, you don't have a move like what you have right now. So if you look at the pound USD right now, or let's have a look at pound USD, right? Because the USD CPI news came out. In the past, inflation, because it was maintained at 2%, you don't have massive moves on inflation. Look, now we have a CPI news, it just went up so strong. Because for the market, CPI news are equally important these days. Does that make sense, right?
Yep.
Yes.
Yep. Thank you.
No worries. Okay, let's wrap it up here. Tomorrow we'll spend time talking about some important concepts, and then we will begin to, from here on, we begin to put things together. So it will now make more sense as a one piece, and not pieces here and there like it is at the moment. But pieces here and there is important. So when we bring it together, it will all click fast. So tomorrow is that big day where it will begin to click a lot faster for you all. Okay. All right.
Thank you, Mr. Ali.